Here you go. Special class on consolidation. We'll do two questions. One is on question number 5 from your ICA study material. This is not your Jan 2025 edition. The new edition, May 25 edition. So in this May 25 edition, two questions. One is question number 5 and one is question number 9. If you try to download this from your ICA study material, which you can surely do, ici.org, students, BOS knowledge portal. Then you go to study material, CA Inter, English medium, advanced accounting. There will be two editions available. Download May 25 edition. However, they have given the same PDF in both the places. Fine. So this is break a leg antaralla hage. Bega barbeku. Can we start with question number 5? I'm going to show question number 5 here only in the question, here only in the same sheet. Well, later when I share the PDF, you would get this as well. But however, you can choose to see it from here any given day. Arambiklama. Set. There you go, a variety question. Question number 5 from our ICA study material on the topic of consolidation in the new edition of material. Very unique question, just like the name. Read the question. Variety Limited holds 46% of the paid up capital of VR Limited. So VR Limited is a company in which Variety Limited holds 46%. This is a topic of consolidation, but it's not our subsidiary by way of shareholding. Why? Because we own only 46% of their share capital. The shares were acquired at a market price of rupees 17 per share. What is the market price of that company share? 17. Why have they given this to us? Later, when it becomes our subsidiary, if we have to identify our cost of control, in that book value of investment will be for 46% shares, it is 17 rupees per share. Later, whatever we acquire at the price, whatever we acquire. So we have not bought more than 50% in one go. We will buy it in two installments. One installment at 46% of the share capital at rupees 17 per share, which is already bought. Then see, balance of the shares. What is balance? 54%. 50 is held by a foreign collaborating company. Before we go any further, let's write the little data what we already got. VR Limited, in this company, Variety Limited holds 46%, foreign collaborator holds the balance, which is 54%. Am I right? And this 46% I bought it at what rate? At rupees 17 per share. I have already purchased 46%, each share at what price? 17 rupees. Okay, read the question further. Memorandum of understanding has been entered into with the foreign company providing for the following. What is the information? The shares held by foreign company will be sold to Variety Limited. So we have 46% in VR Limited. We are going to buy the remaining 54% which is held by the foreign company. So that the price per share will be calculated. The price is to be agreed upon. No, foreign collaborator will sell that 50%. I have to buy that 50%. At what price is he selling? He has selected the pricing as capitalizing the yield by 15%. Capitalizing the yield by, yield means profit. Capitalizing means they are assuming that the rate of return is 15%. Assuming that the rate of return in the company is 15%. If the company earns profit of 15, the value of the company is 100. If the company earns profit of 30, the value of the company is 200. So we will take the profits of the company, divide it by 15, multiply it by 100, we will get the total company's value. What are they valuing the company? They are valuing that any person who starts the business will be able to earn 15% income. Any person who starts the business will be able to generate 15% in return on the capital. So they would give us the profits. Assuming that to be 15, we'll find how much is 100. Whatever is 100 will become the value of that company. In that I already own 46. Their valuation is 54. That 54% will be bought at that. Get it? Read further. Yield for this purpose would mean 40% of average pre-tax profits. Yield divided by 15 into 100 will give the capitalization. How do we find yield? Yield is not complete profit itself. Yield is 40% of the profits. Why? 60% anybody will do. So telling only 40% of the profit should be taken into consideration. Okay, whatever they tell. They've told not to take profits of 1 year. They're asking us to take average of the pre-tax profit of last 3 years. Last 3 years profit is 30, 40, 65. Take your calculator, everyone. Do 30 plus 40 plus 65. 30 plus 40, 70. 70 plus 65, 135. 135 is the total profit for 3 years divided by 3. 45 is the average pre-tax profit of last 3 years. What is 45? Average pre-tax profit of last 3 years. That you multiply it by 40%. Why? For the purpose of yield computation, profit to be considered is not the full profit. It is only 40% of the average pre-tax profit of 3 years. You do 45 into 40%? 18. Okay, 18 lakh is the yield. 18 lakh is the, they're telling yield is considered to be, sorry, capitalization is 15% of yield. That yield is 18 lakh. How much is capital? Divided by 15 into 100. 18 lakh divided by 15 into 100. 120 lakhs is the total company value. 120 lakhs is the total company in which I already own 46%. So that foreign collaborator has 54%. 2 into 54%. 64.8 lakh is the purchase consideration that I should pay to buy their 56%, 54% stake. 54, no? Understood? Shall we read it once again? Please read this once again. The shares held by foreign company. How much? See, Variety has 100% shares. Sorry, VR has 100% shares. In that, I have 46%. Foreign company has 54%. Right now, it's not my subsidiary. There is an agreement to buy the entire 54% which is held by the foreign company. What is the agreement? The shares held by the foreign company will be sold to Variety Limited, that is V. The price per share will be calculated at yield of 15%. So yield of 15% is, if the yield is 15%, capital is 100. How much is the yield? You write here. Yield divided by 15 into 100. If you do, you will get the capital. That is the overall valuation of the company. And for this purpose, yield is computed as 40% of average pre-tax profits of last 3 years. So what did we do? We took 30 plus 40 plus 65. We added all three, divided it by 3. We found the average pre-tax profit, which we multiplied by 40% to find yield. This yield is 15%. How much is capital? Yield divided by 15 into 100. I got the total capitalization of the company to be 120 lakhs. 120 lakhs is the valuation of the full company. Full company, not just foreign company share. Foreign company share 54%. That 120 into 54%. 64.8 lakh is the consideration that Variety Limited should pay to them to buy that company. Later, if you're doing cost of control, 46% of the shares into 17 plus this 54.8 lakh together will become my cost value of investment. It will be compared with nominal value, pre-acquisition reserves, deduct, get goodwill or capital. That they've added one formula which is like FM. Basically, FM they've added it to this for valuation. Shall we write this down? Let me help you with this. Yield capitation. How do we compute yield? If you assume capital as 100, yield is 50. They're giving us how to find the yield. Using that, we should find capital. How do we compute yield? They're telling yield is 40% of average of pre-tax profit for 3 years. Pre-tax profit for 3 years is 30 lakh, 40 lakh, 65 lakh. Add 30 plus 40, 70. 70 plus 65, 1 crore 35 lakhs divided by 3. We get 45 lakhs as the average profit. They're not asking you to consider 45 lakh for yield. They're telling only 40% of that average profit is yield. To 40% of 45 lakh, you get 18. Everyone understood yield? Yield is 18 lakh. They're telling capitalization is at 15%. Meaning, if the capital is 100, yield is 15. If the yield is 18 lakh, how much is capital? 18 lakh into 100 by 50. 18 lakh into 100 by, what do we get? 1 crore 20 lakh is the total value of the company, not of foreign company share. Understood? So we are buying that foreign company share. Am I right? How much percentage? 54%. 54%. Shall we write that? Okay. Consideration agreed. How much is the consideration agreed? So we don't know the full value. For that value, how much is it? It is 1 crore 20 lakhs. For whatever we own, how much is it? We should find. Are you getting it? 100% give 1 crore 20 lakhs. For 54%, how much is it? We can do that. But I would like it if we have any shares data anywhere. Do we have how many shares are there in that company? I have it here. The paid up capital of that subsidiary is how much? BR Limited is 20 lakh rupees divided into 2 lakh shares of rupees 10 each. So can I say 2 lakh is a share capital? Can I? It will become easy in lot of places. So I'll write here 2 lakh. Shall I write 2 lakh shares? In 2 lakh shares, I own 46%. How much is 46% of 2 lakh? 92,000. If you want, I'll add one more line here. 100%. Yeah, 92,000 is 46%. How much is 54%? 1 lakh 8,000. Should I write there 2 lakh shares into 54, or do you understand? Into 54 divided by 100. Don't tell sir, into 54 something else. Understood this? So I am buying how many shares from them? 1 lakh 8. This 1 crore 20 lakh is there? No. That is the value of 2 lakh shares. Is the value of how many shares am I buying? 1 lakh 8,000 shares. How many shares? 1 lakh 8,000 shares. To 1 lakh 8,000 into 1 crore 20 lakh divided by 2 lakh. Okay, take 108 into 120 divided by 200. We're doing in thousands. 64 lakh 80,000. Everyone understood 64 lakh 80,000? Tell ya. 64 lakh 80,000 is the purchase consideration that I am paying them. If you did not like this, we can do it something different. I can write here 100% value is 1 crore 20. 54% alva. 54% value is how much? Do 54 into 120 divided by 100. You got 64 lakh 80. Tell ya. So how much is the consideration that I am agreeing to pay? 64 lakh 80. 64 lakh. Everyone understood till here? Read the question further. A adjustment is over. A is over. Shall we read B? The actual cost of the shares to the foreign company is 5 lakh. Long ago that foreign company had bought this for what price? How does it affect to me? I am Variety Limited. I am buying shares of VR Limited. Shares of VR was held by foreign company. Foreign company's price is of no consideration to. They had bought it at what price? 5 lakh 40. They are selling it at what price? 64 lakh 80. I can compute their profit and whatever comes other step. Do 64 lakh 80 minus 5 lakh 40. Their sale consideration 64 lakh 80. They had bought it at 5 lakh 40. Deduct it. What do we get? 59 lakh. Oh my god, they made 59 lakh 40,000 profit on this transaction. Okay, it is not just us who's feeling so much of profit and jealous. It's not just us. Someone else also is feeling jealous. That would be accruing to them. Would be taxable at an average rate of 30%. Tax payable will be deducted from the proceeds and Variety Limited will have to pay to government. Government is asking you whatever profit that foreign company makes, you are the representative of a foreign company. Before you give it to them, you deduct the TDS. How much? 30%. On what? On profit. Get this? Let's not sugarcoat this. Why? If you try to sugarcoat this, then GST 18%. So write it as it is. Let it be salty like this only. So what should we be doing? They had purchased the shares at 5 lakh 40. They have sold it at 64 lakh 80. On the profit that they make, we have to deduct TDS. How much is their sale price? 64 lakh 80. Their sale price, not our sale price. For us, it is purchase price. What is their cost price? 5 lakh 40. Identify their profit. See, we should compute profit of one foreign company also. 59 lakh 40. On that 30% TDS. 17 lakh 82,000 should be deducted. 17 lakh 82,000 should be. Now deduct 17 lakh 82,000 from 64 lakh 80. 41 lakh 46 lakh 98,000 is the purchase consideration payable to foreign company after TDS. But agreed compensation is 64 lakh 80. 17 lakh 82,000 will be paid to Central Board of Direct Taxes. CBDT. Need to create one challan and then file your TDS return and then pay this. How much? 17 lakh 82,000 paid to government as a TDS on the payment to be made to foreign company of 6480. 6480 is my consideration. What is my cost? 6480. I pay 1782 to government, 4698 to my foreign company. Understood? Read the question further. out of the net consideration. Net means after TDS. Gross is before TDS. Net consideration is 46,98,000. 50% would be remitted to the foreign company immediately, and the balance will become unsecured loan repayable after 2 years. 50%, 50-50. How much am I paying immediately? 23,49,000. How much is transferred to unsecured loan? 23,49,000. That's it. We're done with that second adjustment. Anybody has any doubt? Yeah, please. Then read what is there after this. Third point. Third point is also over. Yeah. The above agreement was approved by all concerned parties. We've already written entry. We already did all the adjustments for giving effect on 1st of April 2011. The total assets of VR Limited. VR Limited is subsidiary company. 31st March is how much? 1 crore. What is the value of that VR Limited's assets? 1 crore. It is decided to write down the PPE by 1,75,000. 1 crore is the value before revaluation. When you do revaluation, it becomes 1 crore minus 1,75,000. How much is 1 crore minus 1,75,000? 98,25,000. That is the value of its net assets. That is the value of its current liabilities is on the same date is 20 lakh. 1 crore is the value of the assets before revaluation. Once you revalue, it comes down by 175. It will become 98,25,000. This is assets. We should deduct liabilities of 20 lakh. Deduct liabilities of 20 lakh. What do we get? 88 lakh or 70? 78,25,000 is the net asset value of that company. Am I right? How did I acquire that company? I acquired a certain number of shares by paying 17 rupees, 46%, 54% by paying 64 lakh 80. Add both. Add my 92,000 shares into 17. 92,000 shares into 17. 15 lakh plus 64 lakh 80. 80 lakh 44,000 is the total consideration that I have given to buy that company's shares. 100% it's with me now. How much did I pay? 80 lakh 44,000 is my purchase consideration. Book value. Nominal value of their company. Nominal value togobadi. Take reserves. What to say? Whatever that 1 crore minus 175 minus 20 lakh you take. What did you get? 78 lakh something. That difference is there, no? That is goodwill or capital reserve. If you paid extra goodwill, if you paid less capital reserve. Sir, but shouldn't we be comparing with nominal value? You are right. We should compare with nominal value. We should ignore this 1 crore. We should ignore 175. We should ignore 20 lakh. Whatever we found, no? That 1 lakh 92,000 shares into 17 and 1 lakh 8,000 shares get 64 lakh 80. That becomes book value of investment. That should be in inner column. Nominal value rate in outer column. Need to deduct the pre-acquisition reserves. Pre-acquisition reserves 1,75,000 minus pre-acquisition. Balance of the reserve, we need to find it. How? Prepare one balance sheet. Write PPE, write revalued amount, write current liabilities, find reserves as balance. Entire thing assume it to be pre. I did deduct it from my book value of investment, then you will get out. What am I doing? I am doing ulta. You write nominal value outer column, book value inner column, deduct pre-acquisition reserves. Instead of deducting pre-acquisition reserves, I told you can add it to nominal value. Nominal value plus reserves. Equity share capital plus reserves. Equity share capital plus reserves is nothing but assets minus liabilities. Balance sheet, assets, liabilities, capital, reserve. Capital plus reserve or assets minus liabilities will be same value. Instead of adding reserves to capital, we deduct it from investment in our cost of control. Either ways you do, will get the same answer. I'll teach you both methods. But what usually they do in the ICS study material is they don't deduct pre-acquisition reserves from book value, they or add it to nominal value. I'll teach anyways. Okay, come on guys, let's do this part now. So what to do? First, what is the consideration that company's net asset value is how much? 1 crore. Can I tell that 1 crore is the value of that company? And they are doing downward revaluation of PPE by 1,75,000. 1 crore minus 1,75,000. 98,25,000. Further, the current liabilities of that company is 20 lakh. Deduct that 20 lakh also from the same value. You got 78 lakh 25. 78 lakh 25 is the net asset value of VR Limited on the date of acquisition. No minority. Why? I own 100%. How much do I own? How much money did I pay to buy that company? For our first 46%. For our first 46%. I paid 17 rupees per share. How much did I pay? How much is first 46%? 92,000. Do 92,000 into 17 per share. 15 lakh 64,000. Correct? Hell yeah. And I purchased that company's balance 54%. No. From foreign company. How much did I pay? 64 lakh 80. I paid 64 lakh 80 for that 54% held by foreign company. I paid 46% what I held. Together I paid how much money? See, I paid 80 lakh 44,000 to get 78 lakh 25,000 worth of net asset. Have I paid more? Yes. That excess money what I paid is goodwill. 1 lakh 75 plus 44. 2 lakh 19,000 is goodwill. Easy? This is how they have done in the material. But if you have to do it slightly different, I'll tell you how to do. You people usually used to do like this, no? Book value of investment and nominal value of. Nominal value is full 2 lakh shares. 2 lakh shares of rupees 10 each, 20 lakh. Am I right? How much is our book value? 46% investment, same thing, what we did here. 15 lakh 64, 92,000 shares into 17. How much did I pay for that 54% bought from foreign company? 6480. So total value of my investment is how much? 80 lakh 44. Previously, what did we do? We added net asset and then deducted liabilities, found the net asset value of that PR Limited and wrote it here. Net asset value is nothing but assets minus liabilities. In a balance sheet, assets minus liabilities is same as capital plus reserves. So that here whatever we did know here, this 78 lakh 25 is assets minus liabilities or capital plus reserves. Capital plus reserves. Here what are we going to do? That reserves will be shifted down and we deduct it from this. But we don't know how much is reserves. How do you find it? Prepare a cute balance sheet. What is the objective of this balance sheet? Only to find reserves. Only to find share capital. We know how much is share capital. 2 lakh shares of rupees 10 each. Correct? How much? 20 lakh. How much is this? 2 lakh shares of rupees. Reserves, that is what we're trying to find as balance. Current liabilities is given in the question. How much is current liabilities? Current liabilities of PR Limited is 20. I would write here current liabilities 20. And I would write assets, PPE. PPE was 1 crore, but now they've done downward revaluation of 1 lakh 75. You get 98 lakh 25. That's it. End of the list. That's the end of the list. There is no more assets. That is total assets. 98 lakh 25. 98 lakh 25. Deduct 40 lakh. 58 lakh 25,000 is the total reserves. You bring that 58 lakh 25 here. Deduct that pre-acquisition reserve of 58 lakh 25. You get 22 lakh 19,000 as book value of investment. This is your asset. This is your liability. In the usual shortcut that we do. In this question, it will become lengthy, but lot of questions it saved our time. How much will be the difference? 2 lakh 19,000 will be goodwill because asset is